Israel-Gaza war. This could have major consequences for the world economy. However, there are different opinions as to which ones could be. We analyze it below with data that you will find surprising. Tod-Ai, Market News. The characters are fictitious and do not correspond to real people. Invest at your own discretion. Script and production by Edgar Garcia de Pereda. The first data to analyze in times of war is oil, and it is here that we are going to see the first surprises. Oil is worth the same today as it was in 1973 before the Yom Kippur War, if we weight it with the U.S. money supply, M2. In the top chart, we see the evolution of the price of oil weighted by the money supply. This had a high price from the war onwards, from 1973 to 1982, almost a decade until the market was able to re-establish itself. The bottom chart below contrasts this, where we see the evolution of oil in orange, and that of the money supply in blue. In fact, there have been only 4 major milestones for oil to rise or fall sharply in 50 years. 1. The aforementioned Yom Kippur War in 1973. 2. Iraq War in 2001. 3. Arab Springs in 2011. 4. COVID-19 crisis in 2020. In this case, the price dropped due to lack of demand. We are now entering the situation with which the West is approaching the war. The West is not in the best position to finance a war and an energy crisis. Inflation does not fall below the 2% target, and these things don't help. We could even have another sharp rise if the same thing happens as in the 1970s, on the left side of the chart, as we have painted on the red line, to the right of it, guaranteeing a strong recession in the year 2026. Debt to GDP has reached levels higher than those after World War II in the United States, but also in the West in general. Since the dollar went off the gold standard in 1971, has not stopped growing. There is less and less room for debt to keep rising. In the following chart, we see the U.S. 10-year bond versus inflation data. In the 1970s, a 10-year bond at 7% did not contain a new, stronger wave of inflation. Today it is around 4.6%. The Fed, in their statements, maintains a hawkish tone, indicating that high rates should be sustained for a longer period of time, and that having them below 2% does not seem feasible at this time. Another important data. Oil reserves in the United States have fallen to levels not seen since the early 1980s. For a long time, no investment has been made in the search for and exploration of new deposits. It is now being, to reduce the dependence on other countries such as Russia, but for the time being there is a risk of shortage. We have already said in this channel that there is not enough oil to support economic growth, and that this is the main reason for rate hikes. These conflicts can only aggravate this situation. To conclude, the purchasing power of the dollar in relation to other major currencies has been on the rise for the last 12 years. This creates an obstacle for exports, but importing products to the U.S. is more economical for you, such as buying oil. On the other hand, in Europe and other non-producing countries, expensive oil with an expensive dollar raises energy prices in its local currency. About the war, Iran has not stated that it supported the Hamas attack, but to be against the attacks by Israel. Iran is a major oil producer and has a very important role in the control of the Strait of Hormuz, where it is transported, not only oil, if not also liquefied natural gas. It is in Iran's hands to generate a new energy crisis, at a time when prices are already high, and a lot of debt. We could find ourselves in the midst of a major recession and runaway inflation. A new component in these conflicts is Bitcoin. What does Bitcoin play in all this? Bitcoin cannot be censored, nor confiscated, or being created to a greater extent than what is programmed. This is a great shield to avoid wars, just the opposite of what happens with ordinary fiat money. It can be a great store of value in times of uncertainty. We move on to the opinions where we will talk about the impact of the war on Bitcoin.
The most decisive data for the economy and the markets is going to be, as always, liquidity generated by central banks. Save China, all the major central banks have stated that they want to lower liquidity. This generates less investment and a reduction in the value of assets. The graph shows how, after a great climb up the COVID, the liquidity was reduced until October 2022, but from that moment on, had not been reduced in almost a year. Now it seems that this trend will continue, but the war could turn the tide, to avoid the collapse of the markets. What is certain is that the debt will continue to increase.
Debt to reach 200% of GDP in the next 3 years in the US. Inflation will cause the amount of dollar-denominated debt to increase, less in other assets. Inflation will be necessary to repay the debt, and to be able to take inflation into account, the bankruptcies of other energy-dependent countries will be taken advantage of, that they will not be able to pay their debts and will be exposed to major powers such as the United States. United States and China, mainly, will hold valuable assets of other countries because of debt seizures. The game is that others go bankrupt, to have more world domination. In these times of inflation and uncertainty, hard and defensive assets will increase in value. In the 1970s, the price of gold increased almost 7-fold, red line on the chart.
Bitcoin may also be favored as digital gold today. Economic cycles that force central banks to expand liquidity increase its value. This is coupled with existing Bitcoin growth slowing in March 2024, and that the number of users will increase exponentially, as an alternative to the banking system in times of crisis in many countries. In addition, approval of ETFs will bring in institutional investors, favoring the price in the short term. In my opinion, I don't think ETFs are good for Bitcoin in the long term, unless the Bitcoin reserves held by the company are equivalent to the amount deposited by their investors, which is not the case with gold ETFs, for example.
I believe that Bitcoin will rise, but will do so to a lesser extent in the next cycle due to inflation. This is something that has not happened in the history of Bitcoin and may harm it, because the dollar will also become a safe haven asset, and will compete with it. There will also be selling pressure, due to users' needs in the face of economic problems. This will happen, especially in 2026, in what could be the next downward cycle.
Thank you very much. Volatile times are expected, and we will have to be aware of the changes. Don't forget to subscribe for more truth-seeking economic information. We also appreciate your comments.